for subscribing to our YouTube channel. I'm Jude Victor, and today I want to talk to you especially on how to manage your trade. One of the key things that makes you very much profitable is in managing your entries, managing your trades. How do you manage your trades? Now, in managing trades, there are various things you must pay attention to, and first of all is confirmation of entries. And then the second thing is risk reward ratio, and then the third thing is should I say position calculation, and then finally would be, or should I put it under position calculations, because I'm looking at how you are able to decide on closing some entries and opening more entries, and I'm looking at what I should name that. So first I said we're going to look at confirmation of entries. Second, we're going to look at risk reward ratio. Third, we're going to look at position calculation. Then finally we're going to look at increasing profits with respect to risk. These are the three things we'll pay attention. I just want to increase the text size so you can see clearly what we will be using to talk on managing trade. So I want you to know that trade is on, and that's why I cannot tamper with the analysis on the screen, and I cannot tamper with all that I have on the screen. So pardon me, and even though I'm going to be using some of these few entries to show you how these four things you should consider in managing your trade would play. Alright, okay, so how do you confirm your entry, which is the first? How do you confirm your entry? Now look at this entry that I took just a few minutes ago. It was quite a fast entry. Okay, so we took this entry yesterday. How did we confirm it? As smart money traders, after the change of character, where we pay attention to is a POI. The POI gives us the confirmation for entry. So this particular POI on this side was what confirmed this particular entry. And then there's another entry and there's another entry. For those who did the top-down analysis with us, you'll notice that the dollar index already gave us confirmation that it was going to be going bullish, and that's why we consider that we were going to be looking at for sales for GU, and that's why we targeted a sell here and targeted another sell here. So we took two entries just for this. So you can see how we confirm entries. So we don't just get into the trade. Now if your confirmation is wrong, because there are times when the trader is not sure of an entry, but because he wants to force trade and he wants to trade, maybe he's under pressure or his lack of patience, in that case his confirmation is not accurate, and for that particular situation his risk reward ratio will be bad, his position calculation will be altered, and his he may not be able to increase his profit in the course of that trade. So in that case he's going to be on high risk, because he will only increase this profit with respect to risk management. Okay, so and first, as you can see, that's why confirmation of entries was the first thing that was clearly stated in this particular lesson. So now I will use this one we took on Monday to show you where confirmation of entry will give move to the okay. So now for this particular entry, you would notice that it started from this point. After there was a change of character, break of structure equal low, range, change of character. After a break of structure, if you find a change of character, it's a good sign that the range is about to break off. Now that was where we confirmed this particular entry. Okay, first there was one here and we closed it around here, and then there was another one, so there were two entries. Now this second entry was confirmed. Just wondering how these entries went now, but let me speak from this side. Because there was a confirmation, all we needed is to see how the confirmation plays out. So I'm going to go back to historical data so I can clearly show you that. In this case, okay, this should be it, Monday. Okay, no, this is Wednesday. That's supposed to be Monday, okay? Alright, so this is it. Okay, now I can see that first entry. It was not done on this time frame. Okay, so it was done on this time frame. It was done on this time frame, and then it came down to this point. Oh, I think this entry was put is an error. So maybe I touched something and it appeared. Well, let's shift it aside so I can do my explanation, because I know we took only one entry on Monday. So now this change of character and break of structure is a confirmation for the entry at this POR. Now the moment we enter this trade and you see another break of structure, what it means is our confirmation is correct. That's why confirmation is the first thing to consider. So let me bring the factors closer again. So that's why confirmation is the first thing to consider, after which you will now begin to look at the risk reward ratio. This is a confirmation. The risk reward ratio is 20 pips. Stop loss, you can see it. I always tell you to maintain 20 pips. You can see it. Then what are you expecting? You can see what is here is 27. So what we are targeting, or what is possible to target, because there was I think there was a bullish order block at this point. So what's possible to be targeted is good enough as a good risk reward ratio. So in managing your trade, first you confirm. Okay, you can see 31 pips was bagged. Okay, so you consider your confirmation entry first. After your confirmation entry, you look at your risk reward ratio. So you're going to be looking if the risk reward ratio is 1:1. If it's 1:1, then it's a bad risk reward ratio. It must be one. The reward must always be more than the risk. 1:1.5 is okay. 1:1.9 is okay. 1:2 is okay. So it must be more than what you're risking. Now once your risk reward ratio is correct, then you're going to be looking at position calculation. So how much is the money and what is going in? So let's assume you are doing $5,000, and what I always advise my students to risk is 1%, and then if you're risking 1% for 20 pips, that means you're going to be losing just $50 on this particular entry. Okay, so in that case, what do? Find out the standard lot which you're supposed to go in with, and the standard lot is just 0.25. I always tell you not to go in exactly the same standard lot as calculated. I always tell you to split your standard lot at least into 3. So 0.25 should be divided by 3. So that's what you're going to do in this case. You're going to divide 0.25 by 3. Let's do that. So quickly on the calculator, 0.25 divided by 3, it gives us 0.08. So you see that now, 0.08. So when I'm coming into this particular entry, even if I don't go in with 0.0, it will, of course, there's a way I also do it. Sometimes I divide the 0.08 by 4. Then I come in sometimes with a standard lot of, let me just type it for you so you can see quickly. Sometimes I come in with a standard lot of 0.02. Then you should know that if you take 0.02 at this first entry 4 times, that's going to be that's equivalent to 0.08. You can see that now. Let me just show you quickly. Let's assume you're going in with 0.02. If you multiply that, maybe you go in 4 times, it will give you 0.08. So that's still equivalent. So I can come in here with 0.02 4 times, and as I see the move, I just wait for another break of structure which confirms a trend, and I take more 0.02 4 times, and that completes 0.2. okay, this is it. 0.08 2 times, as I'm going to multiply this by 2, will give you 0.16. so that confirms 0.16, which is about half of the 0.25. so when I take, when you see, if you look very well, you see that in that case my risk has been reduced, my reward is more, and trade is going in my direction because there was a confirmation. So as soon as it gets to the point like this and I find another break of structure, all I need to do is to repeat the same thing here. Okay, reducing. Now take note, when you are repeating the same thing here, you are not putting your stop loss here again. This is a break of structure. Your stop loss for this place should not be at the recent high, which is at this point, because original price is not coming here again. Okay, then your previous entry, which is at this point, your stop loss should be adjusted to this point. So in that case, money exposure has been reduced. Okay, that's the right thing to do. If you don't do this, then you will be manipulated. That's what AI seeks to do to you. Now, so after that, once you find another break of structure at this point, all you need to do is to break even. Most times I say you BE, and many people don't really understand what I mean by BE. BE means break even. So in that case, you're going to come here, I'm going to move that stop loss that is here and bring it to these points. Okay, just the recent high before the break of structure, you put it just there, and then you're going to take more entry. So you're going to take this 0.6 again, so that's times 2, and it gives you 0.25. so automatically you've been able to go in with the exact standard lots which you calculated from your risk position calculator. You've gone in with exactly that lot size, and you have managed your risk properly in such a way that if you're losing, you're not going to lose anything again, because right now you've broken even, which means your stop loss is just about here. So if price for peradventure begins to go backward, you're going to be in profit. If price goes upward, you're going to be in more profit. So you have reduced your risk drastically. So that same point where you use that break even is going to be exactly where you're going to take in the new trades. Now you're going to notice something, in case you've not done this before, because at this point you're already in profits. Okay, it should be about let's see, if this from here to here is 12 pips, it should be about since you went in with 0.16, you should be having about let's say give and take $25. Then when you go in again from this point, okay, which is going to be the second entry from this point, you should have another 25 from here. So but for any reasons, since you're already on 25, price begins to go upward, you will not be on negative. That's proper risk management. You're going to be on positive, because right now your capital is still there, which is your equity, and that 25 is the only thing that is at risk. Okay, so that's the only thing that's going to reduce from this point. Then if it hits your stop loss, you're going to still be in profit because you have broken even. Then if it goes down in your direction, you're going to find your money going towards $50, and if it keeps going again, you're going to repeat. So in repeating the same thing, all you need to do is to look again, break of structure, price came here, equal low, equal high, sorry, another break of structure. You take in again, you can go in. At this point, you can now, you're going to be in profit already for the new entries that you entered here. Okay, so you should be about $40, and then you can actually take in more entries here. Okay, your stop loss still being here. I've already taught you on how to hide stop loss. You cannot bring your stop loss here, it might hit it because there's no place to hide stop loss here. Okay, so this is just for a new entry because this is a POI. Stop loss still remain here. Even this new entry, your stop loss should be here. Okay, and then as price begins to go down, since this is a break of structure, you're going to be looking at taking some profits here because of the signal we got here. I think this was where most of us took out our trade. You know, we are taking out some profit here. Okay, and some they're going to leave at break even, and some they're going to look at closing. And then you're going to find that price, I think break even should be around here. You're going to find the price will just come retrace. Okay, like it did, it's retraced and came here. Remember, we're looking at for sales because DXY for the week in this particular analysis, top down analysis, was going bullish. So you find that the price comes here retested and begins to go again. So what do? If you've closed all those profits here, it should be about 31. You should be having about 70 something dollars. So and you should begin to have more from here. If you did not close and it came back to this point and you take even more entries, you should have about 100 here. Yeah, because you've increased your lot size. Now if you do not close here and price comes here to retest, okay, and probably does not hit your break even, of course you would have taken all these ones out because there were some break evens. Okay, no, the break even was here. You're going to shift it here because this was the recent high, not here. It's going to hit your stop loss here, so this is the best place to hide it. You're going to put it here. Okay, so when price comes, in case you did not close and you take more entries and it begins to go downward again, you're going to find that your profit has increased. So at this change of character, take more. You manage the way I've taught you from here. You watch and see that price comes here, break structure, you take more. You see, watch it again, you see that price that broke structure, you take more. You know, you keep breaking. So your break even should have now come down to this point. You do the same thing here, it gets here, and then at this point now, you're now looking at closing. So when you see that price is beginning to give a double touch here, 1, 2, you're going to see that price may be retesting from that point. So you're now looking at closing most of your entries, and at the time you are closing, you should be having about $200, if not more. If not more. So think about it. So you come into the market with just about $5,000, okay, and you were planning to trade, and because of how the market is, usually you just go for $50. Now, but with a complete good management calculation, you're not leaving the market with about $200. What does that tell you? That tells you that you can actually increase your profits drastically with a proper management skill, of which I just showed you and explained to you briefly on this. So you can only do this on long trends. If you try to do this on short trends, you might have issues. It will not work. As you can see, we couldn't even see some of the break evens and the break of structure and even the change of character until we came down to the 3-minute time frame before we could spot it. So going back to our entry time frame, which is a 15-minute time frame, I'll just show you how that cannot play with some entries. So when you come to this particular one we took this morning, which is this, you find out that we had a confirmation just after the break of structure at this point when London was going bullish, and our confirmation was to take TP or take profit at this liquidity point. The price got there and did a massive bulls move. Okay, don't think of catching all the moves. Stick to your rules. Our rule says we don't buy at liquidity point, we take profit at liquidity point, and that was what price did at this point. So in this case, you might not be able to do such kind of management skill which I explained to you. So you don't do that on fast moves, you only do that on moves that are either on a trend or breaking more structures and forming new highs.